So guys, first of all, I want to wish all of you a very happy Diwali and a prosperous new year, right? Now let me talk about, of course, the video topic, which is about the expiry day trading. So if you guys have been following this series, you know that we have taken one strategy as expiry day strategy, which is applicable every expiry day, which is usually Thursdays. But today, because tomorrow is a holiday, market holiday, the expiry happened on Wednesday, and that is why we are doing it on Wednesday. So the strategy has been working very well, right? So as you guys can see that for the 9 weeks in a row, we were making consistent profits. But today we broke, that nice series that was going on. And today I had to incur some losses, and it's okay. See guys, profits and losses are part of the equation, right? So we have to, so when we see a profit, we are happy. When we see a loss, of course, you feel bad about it, but losses should not be hated, right? We should not hate losses. We should accept loss as part of the equation, right? Because if a trader starts to hate loss, what will happen is that it will create stress, and that stress is only going to make things worse. And you cannot sustain in a field if you are continuously taking stress, right? So losses are always going to be there. So if you, every time, you are trading and you get stressed out because you see a loss, then you cannot trade for a very long time, because you will get exhausted, you will get burned out. So that's the first thing that I want to say. And I'm sure a lot of you must have incurred some losses today, because option sellers usually incur losses on days like this, right? So that's why I'm saying that don't lose heart. These things happen. So having said that, let me just talk about today. So today the market was doing fine. This is the chart of Bank Nifty, by the way. So after a good run yesterday, the market started showing some kind of momentum in the morning, but then the momentum slowed down. And this is something that I have been discussing with my team as well, that we have to watch out for 18,000 on Nifty and 40,000 on Bank Nifty. If those levels are sustained, we could have seen some short covering, but if those levels do not sustain, then we can see some correction, right? That's something which I was prepared for, right? Nothing surprising that was going on. And then what we did was I was taking recordings of the trades as they were going along. You can see here as well. So what was happening was that I was doing fine here, and then when the market started to break 40,000 and then market started to come down, I was doing fine here also. I mean, it's not like I was making money, I was saying, but everything was going according to the plan, and even this was fine, right? So this is a time where some of my put options gave me trouble. So some of my put option I had to cover because of my stop losses, but I was ready. The strategy was perfect, no issues, because from 130 onwards, I was expecting that the market will have a little bit of a bounce back, so that we can make money on both the options. But then a very, very, very strong movement happened on Bank Nifty, right? And this is attributable to State Bank of India's results, right? So SBI came out with the results, and that triggered a very sharp short covering rally. And that is where the trouble started for my trade, right? So this you can see here that from 39,400, almost till 600 point rally happened very sharply within a matter of 20 minutes, right? And I will tell you the option which gave me trouble. So the option which gave me trouble was a 40,000 call option. So this option right here, I was actually making a decent amount of money, I believe, on this one before things started to go wrong. And you can see how quickly options move, right? So here, this was 25 rupees here. From 25 rupees, it went to 150 rupees, right? So it went so quickly. The momentum was so strong. And then of course it came down as well. But during this process, it took my stop loss. Right. And I did not have a stop loss. Actually, I had a mental stop loss. I didn't have anything in the system. And that's the reason why actually I incurred a big loss, because I was not ready to see such a fast movement. Right. So what I do is that after those, freak trades, I was not putting stop losses in the system for most of my trades. I was manually taking decisions whether to stay in the trade or not. And that was working out fine. But today what I learned was that that is not always going to work, right? So what happened was, when this option started to run, right? So the first, within a few minutes, it went from somewhere around 20, from 30 rupees. So from 30 to 100, it happened within a matter of few minutes, right? So then I thought, okay, maybe I will just wait for a little bit of a cool down and then maybe I will take an exit. But that also did not help, because from there I saw a tick up to 150, right? And then the MTM losses, they went up pretty significantly. And that's the reason, I mean, you have to manage your risk, right? So you have to cut your losses. So that is what was the big trouble today for me. That one trade caused the biggest trouble, where an option went up. I had to take a significant loss there, and then as fate would have it, it came back down. So people can say that in the hindsight, oh, if you would have just stayed in the trade, it would have worked out. Yeah, it would have worked out, but you have to see an MTM loss of 2 lakh rupees, 3 lakh rupees. That's also not acceptable, right? You need to manage your risk. So the learning that I have, there are two learnings that I have, and I want to share with you guys. The number one learning is that, guys, if you have an event, any big stock, for example, State Bank of India, ICICI Bank, or any big stock from Bank Nifty, for example, if it's going to come out with the results during the market hours, after the market hours, that's fine. If during the market hours, if you are aware that something is going to come out with the results, you have to be ready for that. And sometimes they trigger these kind of chain reactions. And number two, you need to have some form of a stop loss, right? So I'm not a big fan of stop loss, because on expiry days they get triggered, and then they ultimately come back down. But then if I think about it, right, let's say for example at 25 bucks, if I had a stop loss at, let's say 50 rupees here, right? So double the stop loss, even then I would have done perfectly fine today, right? My losses would have been much, much, much smaller, because I squared off this trade at a very unfavorable price, right? And so having a stop loss is not necessarily a problem, although you have to be a little strategic about it. That is, I think, more art than science. So these are the two things, guys. I just want to let you guys know. See, the thing is that, people who don't like stop loss, they may argue that, okay, instead of, having a stop loss, why don't you create a hedge? The problem is, when you create a hedge, right, it will not compensate for the acceleration in prices here, right? So if I, let's say, sell a put option, even if I sell a put option of 50 rupees, I will not get that much of a premium that I'm losing on this option, right? So from 50, this guy went to 150. So I lost 100 rupees there. And even if I sell that 50 rupees and I get that 50 rupees, I'm still short on 100, right? So option selling cannot compensate for option buying. So anyway, I mean, that is something you guys will have to, choose on your own. But, it is what it is, guys. These things happen all the time. And you just have to be, accept it, learn from it, and then move on. So that's it, guys. I wish you guys all, a very happy Diwali one more time, and wishing you all a prosperous new year.